Hi there, I'm verified champion algo trader Kevin Davey, and today I'm going to talk to you about real life algo equity curves. So let's get started. Today I'm going to show you some of the equity curves that I personally trade or have traded. So let's take a look. Here's one example. This is a platinum strategy, and you can see a few things from this. One, the back test, which was a walk forward optimization, is in the white, and then everything in the blue has been real-time performance. So meaning I stopped development right when the blue section starts, and I've just been running this strategy live ever since then. And when you set things up correctly, you could end up with a good looking equity curve. And this one's been doing pretty well in the blue area, as you can see. It's not perfect. It has drawdowns. Real equity curves have drawdowns, but it's been doing pretty good. Now, a lot of people ask, this is from TradeStation, but a lot of people ask about these green dots. What do they mean? Well, the green dots signify new equity highs. So every time a new equity high is hit, you get a green dot. And that only happens on this particular equity curve, at least in TradeStation, which is a trade by trade equity curve. So this does not show you the performance during a trade. It just shows you the end result. And sometimes that's really important to look at. And a closed trade equity curve doesn't show you those intra-trade variations. The detailed equity curve is what you want for that. And that would give you a better sense of what the actual drawdowns look like and how it feels to actually trade those. Now, the detailed curve will always look worse. It won't have the green dots, at least in TradeStation, but that's how you know you're seeing it. It'll also say at the top, detailed equity curve. And detailed equity curves tend to look what I would call fuzzier. And you'll see that in a second. I'll show you an idea of what that is. And the fuzzier it looks, the harder it is to trade. I think it's important to look at both curves, both the closed trade curve and to look at the detailed equity curve, which is usually by calendar date, either like a daily or weekly type thing. So here's a detailed equity curve for that same strategy. Now that strategy looks a bunch different, right? I mean, what it shows is the first few years it really didn't do a whole lot, and you don't see that necessarily from the closed trade because it only goes trade by trade. And then you can see this strategy took off, but there is a lot of this fuzziness where you can see in this region right here, there's roughly a $20,000 per contract drawdown. This might actually be for 2 contracts, but still, it's a significant drawdown. And even though it's doing good lately, there's still a lot of back and forth with this. So you want to look at that detailed equity curve. Here's another curve. This was cocoa. Again, this is a closed trade equity curve. This is a strategy I trade myself, or I was trading. Here's one for wheat, roughly 6-hour bars. And you can see this one had a longer back test than the others and a shorter out of sample period, that period in blue. But the blue period is really the key to this, because you've developed the strategy. Now you want to see how it runs in real time. You know, the back test, well, it's nice to know it was profitable and looks pretty good, but the ultimate test is always that blue area. Here's one for natural gas. And again, you see a similar sort of thing over all these equity curves. Had good performance in the white area during the walk forward testing. and continued to have good performance in the blue area. That's what you're looking for. Here's the detailed equity curve on that one, and you can see anytime there's a flat period, it just wasn't in the market. So it doesn't necessarily have to be in the market all the time. But when you combine this curve with this curve, you get a good sense of what the strategy does and what kind of drawdowns it incurs. Here's one last one, and I wanted to show you this because you say, hey, you've just showed all good equity curves. Do you ever have ones that break, that fail? Here's a good example. This strategy looked pretty good during development, and it had some initial problem initially, but then it did really well for a long period of time. Eventually, though, it seems to have broken and gone into this long, protracted drawdown. The way I look at it, no strategy lasts forever. Each one is going to have a certain life to it. I've had strategies that have lasted 10 or more years. I've also had strategies that have lasted 1 year or less. So, no strategy lasts forever. That's something you have to remember. Alright, well, hopefully you liked this video. If you did, give it a thumbs up. I'll keep making more. Subscribe to my channel, leave a comment. And best of all, and most importantly of all, have a great day.